Welcome to Living Your Greatness. Each episode, we bring on great people to inspire you to achieve your greatness. We discuss topics all related to health and wellness. Listen to world-class stories, learn valuable lessons, and turn knowledge into action. It is now time for you to unlock your inner greatness. Welcome everyone back to the Living Your Greatness podcast. My name is Ben Mummy, and today we have another special guest. His name is Peter Krauth. For those of you that don't know who Peter is a former portfolio advisor and a 20-year veteran of the resource sector with special expertise in precious metals, mining, and energy stocks. He is the editor of two newsletters to help investors profit from the precious metals market opportunities: Silver Stock Investor and Gold Resource Investor. In those newsletters, Peter writes about what he is buying and selling. He takes no pay from companies' coverage. Peter has contributed to numerous articles on Kitco, BNN Bloomberg, The Financial Post, Seeking Alpha, and many other investing news publications. Peter also holds a Master's of Business Administration from McGill University. Thank you, Peter, for being here today. It is great to have you on the show. Welcome, Peter.
Well, Ben, thanks for inviting me and having me, and the pleasure certainly is mine.
Awesome, Peter. Yeah, likewise. So, Peter, starting off today, tell us about yourself. Where did you spend your formative years growing up in Canada? What led you to a career as a resource sector writer and investor? And can you tell us more about the genesis of the two newsletters that you write?
I'd be glad to do that. So, I grew up on the outskirts of Montreal and spent my formative years certainly, all in this area. And ultimately ended up in the early 2000s doing an MBA, a finance MBA at McGill, and started to do some work, writing work on different projects with a newsletter publisher down in the US. Eventually that kind of morphed into my own resource newsletter with them, and that spanned several years. And then with the downturn in the resource sector, which lasted about 4 or 5 years, later on, eventually, I continued to work with them and do several projects and contributing, research and articles and so on. Eventually that ended up morphing into doing freelance work for mining companies. And that spanned about 1.5 years. And then in the last year or so, started to get the itch to get back to newsletters and started doing some research, and ultimately, eventually ended up connecting with Gwen Preston of the Resource Maven. We saw that we really had very similar views on things, a very similar outlook, and talked about what some ideas, what ideas we had, and what kinds of newsletters to add to what was already in her offering that would make sense for the market. And we saw there was a void. There were two, one in particular. One was that the silver sector was very underserved. And we quickly realized that there was just a very, very, very short list, a really small handful of newsletters that, are serving that space, but have a different approach. And we thought it made sense to bring something like this to market, that there was probably going to be a fair bit of appetite for that. And so January 1st, over a span of a few months, we worked on that quite intensively. Then on January 1st of 2021, launched Silver Stock Investor. And at the same time, I took over the editing and research and writing of one of Gwen's other newsletters. That's a more generalist gold and mining newsletter called Gold Resource Investor. And that's how I became involved with those two newsletters. And that's been since the start of this year.
Awesome. Peter, I kind of want to start off today by looking at, at the start of May, legendary investor Warren Buffett said, "We are seeing very substantial inflation." His company, Berkshire Hathaway, said inflation hiking prices are due in part to rising input costs. Commodity prices from corn to palladium have surged in recent months. So what is going on? Are we at the start of a new commodity boom? What is the growth telling us right now about the economy and the markets in general?
Well, I would certainly agree with Warren Buffett. We certainly are seeing a lot of inflation. It's not showing up perhaps in official government statistics, at least not quite yet. I think that will come. And in fact, for perhaps convenience on their part, it'll always be somewhat understated. But it's certainly starting to show. I follow all sorts of things, commodities, some more closely and some less, but overall the entire sector. And if you look at things like agricultural, base metals, precious metals, things like real estate, land, I mean, it's really across the board. It's been very impressive how quickly we've seen prices start to rise. I don't think anyone listening is unaware of what's been happening in real estate when it goes to when we talk about things like either rent or home prices for homes, whether it's condominiums or single family, detached, semi-detached homes. Right across the board, prices have been rising dramatically, and that's in part from demand, and in part from, I think, a bit of limit to supply, things like lumber and more basic resources, cement, aggregates, and even energy. All of these things have been trying to play a lot of catch up, and it's certainly filtering through the economy. And Warren Buffett's right. There is a lot of inflation that's starting to rear its head, and we're starting to see that across the board. So, there was a commodity boom, I'm going to say, from probably, the 2 decades of 2000 to 20, the decade from 2000 to about 2010, 2011, 2012. Then we went into a bear market that spanned about 5-6 years. And then it started to revive again. We started to see it, I'd say, more in precious metals, gold and silver, starting back in 2016 or so, and that went sideways a little bit, and then really started to pick up in late 2018, 2019. And now more recently, we're seeing it basically across the board with agriculture and base metals and so on. So now it's really starting to show itself in all hard assets, essentially.
And Peter, that brings me actually to my next question. Since the start of the pandemic, central banks have taken unusual monetary policy decisions. For our listeners' benefit, can you share what impact you believe these decisions will have on the economy?
Well, you're right, Ben. I mean, if we just look south of the border in the U.S., the Federal Reserve, the central bank of the U.S., has been buying. It's about $120 billion a month worth of bonds. That's a level that's unprecedented. The idea is to try to put pressure and keep interest rates low. That's for several reasons. One is to stimulate the economy, to make it easier for people to borrow money, to pay back their loans. It also makes it easier for the government to borrow because its interest payments are kept low for that same reason. But that can only work so long, and central banks really have mostly control on what we call short-term rates. Anything longer term, 5 years, 10 years and up, that's really much more determined by the market, the free market. And so I think that eventually bonds will start to go down in value, which will mean interest rates will go up. They work inversely. And we saw a bit of that in the first few months of this year, and that put some pressure on gold and silver because they tend to compete with other assets. Bonds are one example. So when interest rates go up, people will become somewhat attracted to bonds because they will pay them higher interest. So that on certain level will compete with gold and silver. As I say, that's one of the things that put pressure on them earlier in the year this year. and that's because the market was starting to factor in higher interest rates. They're seeing inflation rear its head. And so they're starting to price that into bonds. They're demanding higher yields from bonds by putting pressure and selling off those bonds. So I think we're going to start to see that come back probably perhaps later in the year. That may, to some extent, put some pressure on precious metals because, again, they will be competing with higher rates from bonds. But there have been all sorts of instances in history when we've seen rates rise and precious metals do well. So it's not an either or kind of thing. In fact, it can, seeing those rates go up, especially in a consistent way, starts to kind of scare the market into realizing, okay, inflation's here. It's here to stay. It's climbing, and we basically need to start investing in precious metals to hedge ourselves against that inflation. So again, like I say, it's not an either or thing. You can certainly see bonds do well at the same time as precious metals do well.
Gotcha. Okay. So Peter, how should people protect their wealth during these uncertain times? Do you believe people should own more hard assets?
Yes, I certainly do. I mean, these are kinds of things that these are cycles. Hard assets, for example, let's say in the 90s, a lot of the 80s and the 90s would have not necessarily done all that well. Stocks dramatically outperformed, but then there was a shift. And, after sort of years of underinvestment and lack of demand, at some point, you get to a point where there's been so little invested in building, in looking for deposits of metals, for example, and in building and maintaining the infrastructure of mines. And so at one point, in the case of the early 2000s, it was a lot of the development of China that was the main driver. And so commodities were simply not ready for this new surge of demand. And so because they weren't ready, we started to see a boom in prices, and miners slowly started to try to catch up. There's a lag for multiple reasons, but one of them is that, the managers of mines need to kind of see these sustained higher prices for a while before they'll actually go out and commit more money to expanding their operations, looking for more resources in the ground. And so there's that lag. And in the meantime, the prices of these commodities continue to rise. And so you have a boom that lasts for several years, sometimes a decade. And I think we're in a renewed commodities boom in this case. And so, yes, absolutely. People need to have exposure to hard assets. We mentioned earlier things like land and real estate. From my perspective, precious metals, base metals, and the mining companies of those commodities. Agriculture is another aspect of it, but all of these hard assets definitely should play a role in people's portfolio.
Okay, great. And so if we turn to the metals commodities sector, what base metals, if any, are you following closely? For example, copper, nickel, zinc, any others?
Yeah, I mean, those are certainly three that I follow. I also follow uranium. That's, I think, a big one that has probably been way under the radar for a very long time. The disaster in Japan took the spotlight off of uranium. People have shied away from it for a long time. But I think the renewed push towards green energy and clean energy is going to revive uranium. The technology is also certainly improving, and new things are coming into the market in terms of technology. The safety aspect of nuclear power is certainly also a big thing, and uranium is easily one of the cheapest baseload power, which means constantly available power, as opposed to things like solar or wind. which tend to vary and not be constant and as reliable. And because it's a clean energy as well, I think a lot of attention will come back towards uranium, and that will be certainly an area that investors should watch very closely.
All right, great. And so if we now shift to silver, do you regard silver to be more of a monetary or industrial metal, or both, and why?
So silver is actually very unique in this sense because it really is both. The simplest way to kind of show that is if you look at a pie chart that describes and breaks down silver demand. Half of silver demand every year. The silver market is about 1 billion ounces a year production demand. And so of those billion ounces, about half, or 500 million ounces each year, goes to industrial applications. And the balance, the other 500 million, goes to different things, but that includes a big portion of investment, jewelry, which some will consider, a form of investment. And then you have things like silverware, and you have more specialized applications as well. And it's been for thousands of years, it's been a form of money, through multiple cultures, and for centuries in individual cultures, it's been used as money. And so, as I say, it's very much unique in that sense. And it also has properties that no other metal has. I mean, if you think, for example, silver is actually the single best conductor of heat and electricity. It's used in all sorts of things, medical applications like antibiotics. Bacteria can't develop a resistance to silver. It's in between copper and gold in terms of its hardness. It's very much used in electronics, especially, sort of higher end electronics. We're seeing that a lot in things like iPads, iPhones, microchips. And in fact, now with 5G technology for cellular, it's actually part of the network, part of the broadcast network, cellular towers and so on. So silver is, as I say, it's very much unique, and there is no other metal that has such a clear dual role as money and as an industrial metal.
Could you explain the gold to silver ratio to us? How should we expect this ratio to change over time?
So the gold-silver ratio is a simple calculation. All it is you take the price of gold and you divide it by the price of silver, and it tells you how many silver ounces you need at that point in time, but depending on their relative prices, how many silver ounces you need to buy an ounce of gold. Right now, we're probably somewhere around 65. So that means it takes 65 ounces of silver at the current silver price to buy an ounce of gold at the current gold price. This is a really interesting, indicator. It has varied a lot over centuries and even millennia. The US used to be on what we call a bimetallic standard. And silver was actually fixed at 16 times or 16 ounces of silver for 1 ounce of gold. And in recent decades, the ratio has been a lot higher. So it's taken a lot more silver ounces to buy an ounce of gold. And what's interesting is that we've seen from research that when you're in a long-term precious metals bull market, silver tends to outperform gold. So if the listeners can understand that the lower the ratio, the less silver ounces are required to buy an ounce of gold. So that means that the price of silver is climbing faster than the price of gold. So, and we've seen throughout history multiple times that when we are in a precious metals bull market, there's a lag for sure at the beginning, but later on in the bull, silver tends to catch up and tends to outpace the gains in gold. Now, an interesting point is that back in March of last year, when the worst part, the shock of the COVID-19 pandemic hit, we saw an all-time record high in the gold-silver ratio, which reached 125. So that meant 125 ounces of silver to buy an ounce of gold. It had never, ever been that high. And it had been actually climbing up to that point. So that meant that gold was outpacing silver up until then. And since then, it's dropped dramatically. So it's fallen in half already from 125 or almost in half to 65 currently. And, gold was up roughly about 25% in 2020. Silver was up, I think it's something like 47 or 48% in 2020. So we saw last year silver double the returns of gold. So it dramatically outpaced gold. And all the indications are, and in particular from the gold-silver ratio, falling so much lately. And the trend certainly looks like it will continue downwards. It looks like we're in that phase in the bull market where silver will continue to outpace gold's gains. Gold should do very well over the next several years, but it looks like silver will do even better.
Would you recommend our listeners invest more in silver or gold?
As much as it might sound like silver is sort of the automatic or easy answer, I wouldn't say necessarily. Something that people need to keep in mind is that silver certainly is more volatile than gold. That's one of its hallmarks. And for some people, and there are ways to deal with this, even if you have sort of a lower risk tolerance. But for some people that have a higher risk tolerance, that's part of the allure. That's part of the attraction. They like the fact that silver is volatile because they feel that they can and they will take advantage of lows and highs as well. And so, obviously buying on lows and perhaps taking profits on highs. But I would say, for the average investor, it probably would make sense to be maybe somewhat overweight actually gold, just because it's the standard. There's no question about it. When you think of precious metals, it's less volatile. It's been sort of the kind of go-to metal for safe havens. It's one of the reasons that you see central banks holding gold. They don't really hold silver. The value for volume is obviously a lot higher. So, a gold coin that weighs 1 ounce has a lot more value than for that 1 ounce of weight than 1 ounce of silver has. So I would probably say, again, it's going to vary for everyone, but I think people would want to probably be overall a little bit more overweight gold than silver, but I think silver has a place in everyone's portfolio, and it's going to be a question of their level of risk tolerance to decide what percentage that should be, and as well, we can get into this maybe a little bit later, but how to allocate whatever portion goes to silver, how to allocate to that metal and that sector of precious metals.
So if we're still focusing on silver right now, there's a lot of noise out there. What would you recommend we follow more closely when making silver investment decisions, the macro picture, the fundamentals, and the technicals?
Okay, so really all of these probably are worth following to some extent. I'm going to say if you're more of a trader, then the technicals will be somewhat more important for you, because typically they tend to be where you look for, I'm going to say, more short-term and medium-term moves or forecasts of where silver is going. But someone who is less concerned with trading and more willing to invest and hold for a longer period, I would say the macro and the fundamentals make more sense to pay more attention to. The macro is going to be things like the economy, where the economy is heading, what's happening on a global basis or even on a country basis, in a geopolitical sense. And then the fundamentals are going to be things like what's happening with silver demand, what's happening with silver supply, what's happening with mining companies in general. Are they healthy? Are they producing good profits? Are they, depending on how you invest again in the space, are they being, or do they need to replace their reserves, in a dramatic way? Are they shopping for, to take over perhaps smaller companies to replace reserves that they've depleted? So each of these, the macro, the fundamentals, the technicals, they all have a place in investing in silver. It really depends on where you are as an investor in the silver space, and how much each of these approaches, I guess, can contribute to your investment style.
Okay, great. There are a lot of listeners that understand the value of precious metals. However, they have heard the price can be manipulated by big banks on the COMEX market. This makes them a little hesitant on investing in both gold and silver. What can we tell our listeners to give them more confidence to invest in precious metals?
You're right, absolutely. I mean, this is certainly something that's come up several times, and it's an area of concern because some of the larger investment banks, have clearly had problems with regulators for manipulating, and in some cases trying to manipulate, prices of precious metals. So I'm going to come back to that, but what I would say is consider that, if we go back to 2000, for example, 2001, my memory serves me right, silver was trading around $4 or $4 and change, and gold was trading at around $250 at its low. Today, gold's at 1,800 and silver's at 27 and change. So both of those metals are much higher, despite the concerns that some people have when it comes to manipulation. So, I guess my view is that there is probably a certain level of manipulation, or there some attempts at it. I believe that those attempts are pretty much limited to very short-term moves in the price. And if you look farther out to medium-term and longer-term price trends, that those tend to just go away and not be as much of a concern. So it's not okay, certainly, that if these prices are being manipulated. But if you're an investor and you're looking at sort of more the medium and longer term trends in precious metals, you're going to want to probably overlook that and say there are much better gains. There are much more important gains to be made and to be focused on in the longer term in this sector, to worry about what is happening on the very short term basis. And so to move beyond that, basically, and say, yes, this is a sector that's worth having exposure to, because it's clearly heading higher. It has been since 2000, and we're in a secular bull market for commodities, precious metals, clearly so, as we see, fiat currencies from different countries around the world constantly lose value. So there's no question we're in a longer term bull market in precious metals, and that, at least, in my view, isn't something that's of concern.
Okay, great. And so, knowing the history that you have just explained to us, when do you expect the price of physical silver to take off?
That's a really tough one. I mean, it can basically happen nearly at any time. We saw, if we think back to right around, it was late 2010. If memory serves me right, silver was trading around probably, I'm going to guess, $18, $19. By the time we got to April 2011, which was about 6, 7, 8 months later, silver was almost at $50. So it was up 2.5 times in a question of a little over half a year. So again, this kind of thing can happen at any time. If I had to go with all of the research that I'm doing, and the instinct that, I guess, I take from what I'm seeing and sensing. I would say that later this year, there's probably a good chance that we're going to see silver sometime in the second half, which is not that far away. So let's say as of July, there's a good chance in the second half of this year we're going to see silver challenge $30 once again, which it did last August, and briefly touched again this year temporarily. That was in January, early February. But I think we're going to see a challenge of $30 later this year, and probably within a year or two after that, we're going to see a challenge of the all-time high of $50. And after that, sky's the limit. I believe probably we're going to be heading considerably higher.
And Peter, in your newsletter, which I find to be very useful and informative, by the way, you write about how to build a silver portfolio. Can you give us an example of a company that you fall under each category? A large producer, streaming, developers, and juniors in the silver space?
Absolutely. So if we start with large producers, one example is a company called First Majestic. They have again, if memory serves me right, it's 3 mines in Mexico. Some are mainly silver, some are gold and silver. And they have a 4th mine, which they recently bought in Nevada, which is a gold mine. And so that's an example of a large silver producer. A streaming royalty company, one of the best examples, and a long time core position in that space when it comes to silver is Wheaton Precious Metals. They've been around for a long time, and certainly a dominant player in silver and gold royalties and streams. When it comes to developers, one name that comes to mind is Silvercrest. They have probably the largest undeveloped silver deposit in the world. It is in Mexico, and it's very impressive high-grade silver deposit that is working its way towards being built and to eventual production. And an example of a junior, one company I like is Silver Viper. They are also in Mexico. They recently came out with a resource that is close to 20 million ounces of silver. That's their initial resource, so actually quite impressive. And so these are all examples of companies that are in the different categories in the silver space.
Okay, great. Most of the millennials that I connect with have an amount of 10,000 that they would like to be able to invest and speculate in the space. If you had to build a portfolio for someone who came to you tomorrow with this amount of wealth, how would you recommend that they invest it? That is, how would you have them detail and allocate their money across a number of investment vehicles and companies, be it physical metals and miners?
Okay, so one of the first things I want to say is this is not advice to anyone. It's simply, I guess how I build and would build a portfolio. But I certainly think that the foundation is at the very least a small allocation to physical silver. That my preferred choice in that respect is silver coins. Not necessarily collectible coins that where you tend to pay a lot more for the collectible aspect or value that's within the coin because it's older, because it's rare. I'm talking about basic bullion coins that are produced by a government mint. Could be the Royal Canadian Mint, it could be the US Mint. So I would recommend somewhere around maybe 10% to physical silver. From there, I would say 50% should go to the larger producers and royalty streaming companies. That's because that's going to be your lower risk. So you would, to me, it makes sense to have a larger allocation to that because the risk is lower and yet the potential for return is still very high. I mean, one example, Wheaton Precious Metals, I think it was between 2005 and 2008, that company, which was the largest capitalization silver company actually was up, I think it was 5 times in the space of about 2.5 years, which is tremendous for a company of its size. So that gives you an idea how well even the larger companies can perform. So a 50% allocation to large producers and royalty streamers. I would say from there, 20% to developers. So developers, in my view, can be companies that are typically, say, about 200 million or so up to maybe $1 billion in market cap. And they can be either companies that are producing already or and have a sizable project that they're looking to bring online. So that makes them producer developers. Or you can have like the company I mentioned earlier, Silvercrest, which is just a developer. They're not producing yet, but they're certainly advanced and well on their way towards becoming a developer. And then the last 20%, I would recommend probably, again, depending on someone's comfort level and risk tolerance, this could probably vary 10 to 20% in the junior sector of silver. And I would definitely recommend, spreading that across a basket of at least 5 names and maybe preferably up to 10 names, just because they're just so volatile. Some of them may go bust, it's possible. And some of them might do extremely well and produce 10-time returns, maybe 50-time returns, even better. It's not only in the realm of possibility, but it's within history. We've seen it happen multiple times before, and so it's likely to happen again. But because of the obvious risk and because of the obvious volatility in the juniors, I would limit that to about 10 to 20% of the portfolio.
Okay, great. Thanks, Peter. If we look at the last 6 months, there has been some cryptocurrencies that have performed significantly well. And some of those include Bitcoin, Ethereum, Dogecoin. Do you think a silverback crypto is available? How might that look? Will we be able to use it in a day-to-day transaction?
So that's a really interesting question. I've thought for already several years that, and this could be, decades away, it could be a generation away, I don't know. But I think that, if we head eventually to some sort of a major financial reset globally, because we have, such bad developments when it comes to overprinting of fiat money, and then eventually some sort of, an implosion of confidence in fiat currencies, and it kind of forces the system to reset. And there becomes a demand, I guess, from the population for a money like we used to have with the gold standard, for example, where gold or silver is used to back a currency, whether it's a government currency or a non-government currency. I think that there is a strong likeliness that gold or silver or both will eventually be used to back some sort of a digital currency. And I say digital currency because I can certainly, I'm far from an expert, but I can understand a little bit, and I can appreciate the benefits of the entire blockchain technology, the security of it, the decentralized aspect of it, and the facility that it provides with things like payment systems and payment transfers, the speed that they offer. And so for me, at least from my point of view, I think that it's almost inevitable that at some point we're going to see gold and or silver backing some sort of a cryptocurrency that will be used as money to store value, to make payments, to transact, and so on. There are a couple of companies that I know of so far that are doing something along these lines already. I think both are doing something with gold and silver. One is called Aurus.io. That's AURUS.io. Another is Lode, LODE.one, ONE. And I'm no expert in these companies. I'm not recommending them, but my understanding is that what they do is they have sort of created a network of refiners, bullion dealers, vaults, etc. And I'm talking, on a larger, sort of more global basis, a network of these participants in the gold and silver markets, where they can join this network or system, and they can tokenize the some of the metal that they have or that they're producing, and basically use it to back coins or a currency. And so by owning some of those digital currencies, of these companies, and there are others as well, ultimately the holder of that coin or that currency has a claim on a small amount of gold or silver. And if we can get to a point, as I say, in the future where it's done in a way that it's secured, that it can't be messed with, and that there's confidence and trust in it, I think that will eventually be the ultimate form of currency. You basically marry the comfort and the reliability and the proven aspect of using precious metals with the ease and facility and speed and technology that you get from cryptocurrencies and digital currencies. You marry those together, and I don't think you could have a better form of money ever than that. That's, I think, where ultimately we're headed.
And Peter, you have demonstrated your knowledge in the mining sector. What are your top 3 learnings from working and investing in the silver space?
Okay, so I'm going to say the first thing that people want to remember, and I mentioned this earlier, is that silver can be and silver is volatile. It's known for that, and people should go into this sector, if they're going to go into this sector, with that in mind and have that in the back of their minds at least. And again, there are ways, it shouldn't necessarily, in my view, be a reason to avoid it, just to use it to your advantage. And again, there's ways to mitigate the risk and the volatility that may come with silver. Own some physical silver, own some larger producers that will be much less volatile, but will benefit from rising silver prices over time. And like I say, use that volatility to your advantage. Silver is I think going to ultimately rise to prices that will surprise even me. I think it's going to go much higher, and I honestly think that it's going to even surprise the kinds of levels I'm expecting it'll ultimately reach. And so people should simply look closely at the silver space. I think that it will contribute. It can and will contribute very well with a properly managed portfolio to people's returns. And it's definitely an area that they want to have exposure to. So to me, it makes sense to have to invest in silver in its different forms.
Okay, great. And Peter, looking at all commodities, which ones do you think will perform best in 2021?
I think that, we've talked a lot about silver. Silver, I do think that it performed really well last year, doubling gold's returns. I think we're going to see silver continue to do really well again this year. I think of all the commodities, probably uranium is the one which it's very hard to predict, but probably has, in the sort of the near to medium term, probably has perhaps amongst the highest potential, just because it's been so low for so long, and yet demand is clearly going to be outpacing supply relatively soon. So there is tremendous potential in uranium. I think beyond that, some of the ones we touched on earlier, copper, nickel, gold, copper and nickel in particular for things like, green energy. In many ways, if we do transition in a big way towards electric vehicles and solar and all of that, solar takes a lot of silver, but transmitting the power from the solar panels to your home or to whoever's consuming it takes a lot of copper. Nickel has a big role to play in batteries for electric vehicles. And so these metals are basically very much part of the green energy, clean energy movement. So I think that looking forward, they stand to do very well. Gold ultimately is going to do well. It's a safe haven. It's a hedge. Inflation is on the rise and on the horizon, and I think gold will do extremely well also over the next several years.
Okay, thanks, Peter. And what are your top stock pick recommendations for 2021? So
on the lower risk side, I'm going to say, and these are both silver recommendations, but on the lower risk side, I'd say wheat and precious metals. I really like the whole royalty streaming business model because they almost have the best of both worlds. They simply, raise capital. They have a small team that goes out and looks for interesting projects to invest in. And then what they do is they make a payment, usually in staged payments towards developing projects. And once those mines, these are with other mining companies, once those mines ultimately make it into production, then they collect checks. They have no risk in exploring. They have no risk in permitting. They have no risk in building a mine, and they have no risk in operating a mine. And many times royalties have unlimited upside. So if a mine that they've financed a property on a specific property, ultimately the operating miner finds more gold, more silver, or whatever it may be on that property, and goes on producing for 20 years, 30 years, 40, 50 years, that royalty will keep paying no matter what. And there has been, the risk was all up front, and even that is mitigated in many ways. But then there's no operational risk afterwards. And they have very little of the downside and a lot, most of the upside in the profits that come from mining those metals. And as we are in a long-term bull market for commodities, and the prices of those commodities keep rising, that leads right to the bottom line of those miners, and the royalty companies keep collecting those growing checks. So if you look at, there was a comparison of one of the larger royalty companies. I can't remember now if it was Franco-Nevada. I think it was Franco-Nevada versus someone like Goldman Sachs. And they had a handful of employees, and they made, I think it was like $1 billion of revenue per employee. If you factored it through, it was on a per employee basis, it's simply the most profitable business model that we know of. It's just tremendous. And like I say, it's a tremendous way to participate in the mining bull market, the mining and commodity bull market, and take on very little risk and have most of the upside. And if I look on sort of the other extreme of the other end of the spectrum, higher risk, I'm going to say right now my favorite pick is a company called Silver Viper. I mentioned them earlier. They recently put out their first resource ever on their property in Mexico. They're somewhere around about 20 million ounces in all types of categories of certainty of the silver resource, and that is silver equivalent because there's some gold mixed in there as well. And right now, I think that because it's a little bit lower, it's somewhat lower grade than some of the other silver deposits. The market is discounting the price, and I think they're getting it wrong, frankly, in my opinion. I think that it will ultimately surprise the market in terms of how it ends up performing. I guess if I can go to a little bit more specific, one of the reasons I think that it's being underestimated is because the market's looking at the grade of the silver, but missing the fact that this will ultimately probably be what we call an open pit mine as opposed to an underground mine, and open pit mines are much cheaper to operate. So the profitability can be as good or better for mining these kinds of deposits. And I think that's what's sort of throwing off the market right now and mispricing, in my view, Silver Viper. I believe that it's gonna eventually get recognized, and that it has certainly clearly much higher to go.
Okay, great, Peter. And Peter, where can our listeners go to find out more about you or even access your newsletter?
Well, thanks for asking. The main site is www.silverstockinvestor.com. In fact, right now we have a discount, a limited time discount for whoever's interested in trying it out. It's an 85% discount over the first 2 months of subscription. And if anyone wants to try that, all they need to do is go to resourcemaven.ca, click on subscribe now, and from there look for the blue buttons for subscribe now. And if they select $49 per month, which is the monthly rate, and click on that, and that brings them to a subscription page. And from there, if they enter the promotion code Silver85, that will get to the discounted price, and they can try the service for a couple of months, like I say, at a big discount, and get to sort of test drive it and see if it suits them.
Okay, great. Thank you, Peter. Peter, it's been a pleasure having you on the show today. Thanks for being so generous with your time. And I hope to have you on again in the near future.
Well, Ben, thanks for having me. I enjoyed it. I look forward to coming back and doing this again. Something I just kind of want to maybe say is that I work with Gwen Preston at Resource Maven, and our view of how we approach research and writing about investments in the mining space is that we really want to impart our knowledge to others who are interested, and we try to take a big educational view of the whole mining space. And so hopefully that comes through in the newsletters, because we're constantly talking about things that we think are relevant and useful to understand, and helps provide investors with a base for why we are where we are, and why we're going towards where we think we're headed, and why therefore these investments make sense at this point in time. And so that's just basically been our approach and our point of view, and we think that it's helpful to investors. We hope they enjoy that.
Awesome. Thanks so much, Peter.
My pleasure again, Ben, and look forward to doing this again.
Thank you for listening to the Living Your Greatness podcast. If this show has added value, please subscribe, leave a rating, and make a review. This podcast is for informational purposes only.
and is not to be considered personal, legal, or investment advice or a recommendation to buy or sell securities or any other product. It is based on opinions, current events, press releases, and interviews, but is not infallible. It may contain errors, and Living Your Greatness offers no inferred or explicit warranty as to the accuracy of the information presented. If personal advice is needed, consult a qualified legal, tax, or investment professional. Do not base any investment decision on the information contained on Living Your Greatness or our videos.